Hello all, I hope you're doing well in these extraordinary times. I would like to welcome you all to the Fintech Finance Virtual Arena where we're hosting you today. In this special arena, we're going to be having a look and doing a bit of a profile on Scalable Capital. Joining me today, I have the founder of Scalable Capital, Adam French. How are you doing today, Adam?
Thanks a lot, Ali. No, very, very good. Thanks for having me.
And whereabouts in the world are you right now? Because are you in Munich or London or?
No, I'm in London. Lockdown in London, or at least coming out of lockdown. But I've been here pretty much the whole year, and enjoying what is a nice sunny day.
Excellent. Well, let's get straight into it. First of all, big congratulations on your fundraise, 50 million euros last week.
Yeah, thank you very much. Yeah, it's been a busy couple of weeks for Scalable.
Well, before I do want to go into the fundraising, but before we kind of look at what that means and what the opportunities associated with that are, let's go back in time a wee bit. I mean, the first time that we met was Finovate. I want to say 2015. So
yeah, it was. Yeah, I think we were pre-launch in the UK, and we just launched in Germany, and we were there to kind of pitch the concept of Scalable Capital to what at the time was a massive audience for us young guns as just starting out. It was probably the most nerve-wracking thing I've ever done, and yeah, I think we filmed a little video while we were there, right?
I think we may even have done a song.
Yeah, I actually think you might be right, exactly.
But those Finovates, particularly the ones sort of 2015, 2016, it's where Revolut first did their pitch before Monzo, Oak North. They've all almost gone through that there. Well, in your own word, what exactly is Scalable Capital? What's your target audience, so to speak?
Yeah, it's changed a little bit over the years. When we launched, we were just a consumer Robo Advisor, if you will. So we were going after kind of who we had kind of deemed as to be smart professionals who either didn't have the time to invest themselves, or they didn't have the money to go to a high-end financial advisor who needs £100,000 or £250,000 to invest their money. And that was our target market for the first few years of our growth. And through that target market, we grew to about 50,000 clients. We had well over €1 billion of assets under management. Looking at all the countries we operate, we usually go back to euros because of the way that we founded the business. And over time, actually, the business has developed. So we still have that very important digital wealth management arm, that Robo Advisor arm, still a core focus of the business. But over time, we've broadened out our proposition, and we now offer savings products for clients in partnership with Raisin, who I'm sure you're aware of, and your listeners will be aware of. And we just recently, actually just going back to June, launched what we kind of deem a neo broker into the German market. So this is your Robin Hood competitor here in Europe, if you will. And so this is for us, kind of a completely new product line, going after a new target segment of clients who were reaching out to us. We saw a demand of clients who wanted to do things themselves, and because of the technology platform that we have, and obviously the whole business setup operationally, with the customer services team, with all of the connections we have into trading venues, it felt like a very natural extension of the business. And then the kind of the other element of Scalable Capital is the whole B2B side of things. So very early on in our foundation, we saw interest from financial services firms that wanted to partner with us to help them to build similar propositions for their own client base. First one that we ever announced in a kind of a major partnership way, where we were integrated with their retail banking architecture, was ING in Germany, going back into 2017 now. And the most recent one was Barclays here in the UK, where we've been spending kind of a lot of time over the last couple of years integrating with their systems, and we were obviously very pleased to announce that we'd went live, and now their 24 million clients or so here in the UK can get access to that. So as maybe it appears, things have changed a little bit since we first met at Finovate.
Absolutely. Well, looking at on the B2C side of things, I've always been fascinated by the change in behavior of high net worth and sort of ultra high net worth individuals, because it seems that 80s, 90s, it was you're now the new high net worth individual. You'll still be using the same people. It's all about the desk. It's all about that persona. But now, and for me, it always seems that around the same time as the Apple Watch, this was the big shift. The younger new generation of high net worth individuals, particularly with inherited money, they want to have that element of control. They want to be able to know exactly what's going on. They want to be able to do it on a day-to-day as opposed to a monthly meeting in someone's office. What's been your response to that change in consumer behavior?
Yeah, I think that I've been very aware that the experience that everyone, I would say, it doesn't matter what kind of background you're from a kind of a wealth perspective. Everyone is now expects the Amazon experience. Everything on demand, everything in the here and now, one click to get what they want, and always available. And I think that's also true of everything that we're doing. Not even on the wealth management side, but the savings side, the brokerage side. Everyone demands kind of this this convenience factor that I think was delivered in a very different way for these previous generations of what kind of how you define kind of high net wealth individuals. Right, that was an annual meeting with an individual, and I think that there is still value for individuals within the process. But where kind of what we're trying to do with our solution and what we see the client need is that it's completely supplemented with technology to basically get it into their hands in the way that they want, whenever they want it. Be that on an app, or be it via the web, or be it calling up somebody on the phone, or be it a web chat to be able to speak to somebody, being fully integrated wherever they are. And then giving them full transparency. So if that's what's going on in the markets, or how's everything performing in their portfolio, or what am I invested into, these are the demands of this recent client cohort, if you will, of investors that are. They want more control, but it's not. They don't want to do it themselves, but they want to be kind of aware and educated and understand what's going on. And yeah, the technology that we employ kind of helps them to do that. And I don't see that going away. It's not a fad. It's not a trend. Right now across all of our propositions, we have about 100,000 clients invested in various portfolios with either B2B partners or D2C, and this is growing faster year on year. Every year that we've been around, we see more and more demand for these types of services. So I think that it's going to be just a matter of time when this is kind of the new normal. And I always hated the term Robo Advisor because it kind of feels like a very derogatory term. Really has nothing to do with what we're doing ultimately. It's
just an advanced chatbot, isn't it?
Yeah, exactly. Yeah, it's just I could do this and I could build that in 5 minutes, I'm sure. But there's a lot more going on under the hood. It's I kind of wonder what time will it be in the future where we kind of drop the robo thing and we just call it investing or financial advice or investment management or whatever term kind of ends up being the one. Digital investing, when does that just turn into investing? This is how everyone's going to do it. So I think it's only a matter of time, and I don't see anything has changed my mind otherwise in the last 5 years or so.
One of the obviously the biggest trends in fintech at the moment, and I keep talking about it, but it's so true, is ecosystems, marketplaces, that whole, I'll be quoting Ben Robinson, that whole forest instead of a castle. The most obvious one recently is, got my Monzo Plus card, cannot add Starling onto it. And there still seems to be a kind of artificial walls of interoperability. For example, I play around with all sorts of apps, from your free trade, your 212s, your eToros, but there's no way to kind of bring them all together. So I end up doing it manually on a Google spreadsheet, which is kind of not the most efficient way of doing it, but it's the only kind of option at the moment. How do you at Scalable Capital fit into this ecosystem where you're playing with partners, competitors, and even completely bizarre sort of third-party areas such as Google Sheets?
Yeah, I think Google Sheets is the modern equivalent to what I think I did back when I was a young graduate, Microsoft Money. I think I spent maybe 2 months using that and then just got sick, and oh my God, it was just so much work, so much manual work. And I'm kind of, I'm waiting for the new Microsoft Money, if you will, to bring it all together automatically without me having to worry about it. Ecosystem I think is one of the tools that gets us there. But I think we're not there yet. And where does Scalable play in all of that? In some ways, we are in kind of a solution that could be aggregated up into other things, and in other ways, we can become an aggregator. And I think that's kind of what we've seen on the savings investing side so far. That's where we've been concentrating our efforts. Where we now want to be kind of your trusted financial house for anything investing relating, savings related, and investing. Be it, do you want to do it yourself or do you want somebody to help you with that? And I think we're still going on that journey. I think the other kind of element of it, an ecosystem, is around integration of kind of more at a technology level around open finance, open banking. And again, I'm not sure if we're there yet. So open banking is getting itself into a pretty good state. With I think there's amazing kind of companies out there that are helping with either account aggregation, and I think that's one of the reasons why you probably got your Monzo Plus card to try and aggregate it all in. What a shame not everyone is there. I'm
sure they'll be there soon.
Yeah, the one I'd be waiting for is the Amex. That's always been the one which has never really been a company to be aggregated. And so that's
got another prop. You can't talk about Amex without come on Amex and Curve. Be friends, please.
Exactly. I was a Curve user in their early days, and I wasn't shortly thereafter because of its main use case being taken away from me. And so
twice it's happened as well.
I know, exactly. It's a very, very challenging kind of story there, I'm sure, for the Curve team. But that's getting into a good place. But this whole broader concept of open finance, right? Like integrating your investments and your savings alongside your bank account, and maybe even in your insurance products, your pension. I would say we're still on day zero there, and it's really, really hard. The closest areas I sit within, I don't know the insurance world too much, but know the investing world and the pension world. Pensions gets very, very complicated, and some of the more modern solutions to pensions, the pension bees of these world, and the whole concept of auto enrollment going through kind of a small number of larger tech savvy players, be it the smart pensions of the world as well, who offer those solutions. It's going to be quite easy to aggregate them up. But you go back to, the pensions which are being sold in the 80s, in the 70s, which are still around, they're paper-based. I've been to a few kind of, pension dashboard related kind of conferences and various workshops to try and kind of solutionize, how this thing could work. And you hear these stories about pensions and of yesteryear and how they're still operated. So, for example, there's one pension scheme apparently. This stuff is always rumors, but apparently it's there's no digital records whatsoever, and they store all the pension records in two containers, which they the shipping containers, which they then put door to door to keep them basically secure. And if anybody kind of calls up and says, hey, I need details about my pension, somebody has to travel to the shipping containers, and they move them and sift through all of the paper records. And so you think about, that being a financial product which somebody holds today, probably in their 60s or 70s, and, being able to give them access to open finance, it gets really, really hard. And so, I don't know how we get stuff like that integrated into it, but we're still a long way from even getting pensions as a whole, kind of, some of the more modern pensions even integrated in some kind of, API-based solution in the way that open banking is today. So I'm a huge believer in kind of the concept of aggregation and taking all of the pain away from people. What I'm also a believer in is that I think 90+% of people also don't want to deal with it in any way, shape, or form. And I think you're probably not one of those people. You've got every account and you love it all in the same way I do. I've got everything, and I'm always interested in testing stuff out, and I live and breathe everything that's going on, obviously in the investing world, but also have a broader eye on fintech as a whole, just because it's something that I think is so interesting globally. It's hard not to get excited when you look at the various things going on around the world in all of the subsectors of fintech. But so many people don't care. They just want it all to be dealt with automatically by somebody else. And I think that there'll be a big movement towards that at some point in the future.
Can you move a chair out of my room, please? Because it's blocking a way.
You can't cut that out.
Give me just a moment. I've just got to move a chair. Absolutely. Well,
that was amazing.
I wanted to actually bring back something that you said right at the beginning around people are wanting that Amazon experience. And pre-Amazon, people didn't even know that was possible. Do you think that now they've experienced Amazon and everything is, one simple view, do you think they could expect the same sort of thing from their financial services? And following up on that, how can that actually happen? Is that going to be pushed through with hard regulation, or is that going to be, one person does it and then all of a sudden everyone flocks to them and it becomes me too?
Yeah, I always hate to think that it's going to be regulation that brings, kind of actually finds the solution. I like to think that there's enough kind of commercial opportunity to be able to, for kind of companies to go out there and make it work. I'll kind of put regulation to one side because I'm optimistic that we can find a way for somebody to make it a commercially viable proposition to be that one-stop shop and to provide that Amazon experience. I don't think the regulator wants it to be a too big to fail Amazon style institution that delivers it. One thing I'm waiting for, and obviously there's a marketplace approach that could get us there, and a number of banks, including Starling and Monzo as well, to a certain extent, have kind of gone down that route, and Revolut another fine example. I would love my bank to become my trusted advisor as well. I'm also unclear if I want access to every single investment opportunity out there for myself to go, which one of these 10 Robo Advisors or free trade brokerages do I want to use? I want the bank to select the one that they feel is the best for me, and that could be one of one, right? They've really researched the whole market and they say, this is the firm for all of our clients. Or it could be, this is the one we recommend to you based on your personal circumstances, right? And we look at the kind of the scalable proposition with a £10,000 minimum. Obviously, there's going to be a client cohort that that's not suitable for, or it'd be hard to recommend for if you've got very low balances, for example. And that could be something more of a Wealthify proposition, right? You had Wealthify on a few days ago. I think their minimum is from £1, so could easily be a firm that's recommended to that client cohort. So I'm kind of waiting for that to happen. I haven't really seen it done properly yet, but I can see us heading more and more to that solution where the bank is not just the pipes, but ultimately becomes that institution which is basically is willing to stand up in front of their own recommendations across a number of different products and services, and does a lot of things automatically for me. I think that's the key. So the example I always give of where I kind of see finance kind of becoming more of a background service, if I follow the example of Uber. So one of the big enablers of what makes Uber so amazing is the payments happening without you having to do a thing. I kind of almost forget how challenging it was getting a taxi and, thinking,
Do you forget when you get in a normal taxi that, I need to...
Yeah, and, I think, thankfully, the black cabs now they all have card readers in there, and I think they don't charge anymore. It's been quite a while since we lived in a world in which I got taxis. But yeah, I think Uber changed the game there. They weren't the first to do it, but it's definitely the one that I recognize that, you get in and you get out and everything is just dealt with. And there's a financial transaction that happens there and you're almost not aware of it. And I think Amazon have done a fantastic job of doing the same, right? It's one-click buying. You don't have to look up your card details. You don't have to, worry about the checkout process taking too long. It takes 3 seconds. I'm waiting to see if further elements of finance go down that route. Just recently had to renew pet insurance and for our dog. And that's something which is marred with problems around renewals and am I paying the right rate and who am I using here. I'd love it if that was just dealt with automatically in the right way and I didn't have to think too much about it. But it becomes a big event. It stresses me out. So I imagine it stresses people who aren't as interested in financial services out. That's the stuff that I kind of get excited for, that I think the future could hold for this industry and ultimately for people that are users of this industry, which is everyone.
I'm part of a few WhatsApp groups around trading and investing, and there's always a couple of people who are the extreme capitalist, the extreme wannabe Gordon Gekko, and then on the other flip side of things, you've got the person that will only ever invest in a company that is moral at every possible level. Generation woke. Where does that kind of play in? Because at the moment there isn't kind of a unique standard outside of Islamic finance. Where does that play in on your kind of B2C proposition? And have you seen more of a demand of people taking more of an interest into where their investment is going from a moral standpoint?
Sure. So I think the whole ESG theme, if you want to kind of call it that, is like a kind of an industry terminology for kind of what is part of the portfolio construction metrics that kind of us investment managers use. If I go back to when we founded the firm, it was a kind of a fad topic. It was something that people were talking about on the sidelines, maybe become a big thing. I think it's now become a core part of investing for everyone, and not just your generation woke friends, but for the biggest asset managers in the world. So we're very fortunate as a startup to have BlackRock as one of our investors. They invested in us a few years ago in our Series B, and we spend a lot of time together working with financial institutions to come up with B2B solutions for them. And so we talk a lot about various themes in the market, and kind of ignoring kind of the scalable capital investment proposition, thinking about kind of what they do. ESG is now a major core part of their portfolio construction methodology, regardless if a client says they want ESG or not. There is no ESG or not anymore in their world. It's all kind of an ESG rated thing. I think you hit the nail on the head where there is no standard yet. I think there's a lot of firms out there trying to kind of come up with a standard. It's very, very hard though, because it doesn't. What's moral here and what's moral in another country can be quite different. How many layers down do you go down the supply chain to understand what's going on? I think it's not going to be an easy answer, but ultimately consumers want something. The man on the street who's investing in his pension or talking to his friends, he wants to understand what's going on. So there will be some more clarity, more transparency, and so I think there will be a lot of firms out there working towards that solution. In our own space, that's a theme that we've been looking at quite carefully. In the beginning, it was something that, as I said, no one was paying too much attention to. Obviously, we're buyers of financial products like ETFs and funds, and those fund managers, those ETFs, they include some of the biggest companies in the world that, through their shareholder participation, are held to relatively high standards, and even more so over the years, with the likes of BlackRock and Vanguard being big shareholders and pushing this agenda forward in a big way. I think as a company we will continue to do more for our own investors in this space, and watch this space. Let me just say that. But it's something which is happening not just to us but to everyone in the market, and I don't think it's going away as well. It's a huge theme, huge area of Fintech which is popping up with people focusing on this. See some great little startups in the investment world focusing on this kind of thematic side of things. I'm really happy to see it.
Absolutely. Well, you mentioned obviously your Series B with BlackRock, and we got to talk about Series D. I always find it interesting when companies fundraise, because I want to know what that money is being used for. Is it to kind of keep day-to-day operations in the likes of some pre-revenue products, or is it actually this is how we're going to, for example, in the case of Stripe, how we're going to expand our lending platform? So what's the plan with this additional injection of capital? What are we going to be focusing on?
Sure. Yeah, there's obviously, I talked through quite a lot of new launches over the last, I would just want to say month, but over the last couple of years, there've been even more, partners we've partnered with and kind of different services that we've launched. And so we've been growing quite fast. Even this year alone, even with COVID, we've grown the team. We've still been hiring, which is great. Obviously, completely virtual hiring for the last 4 months, and which has been a challenge for everyone involved. But we've had
big pool of talent, though.
Yeah, it is. There's great community of talent as a whole. Engineers are something that we're in dire need of, and have a lot of opportunities still open to grow the team. So the money is being used for growth. It's being used to grow the recent launch of this brokerage platform. The neo broker that we have now in the German market. That's only a few weeks old, and so far it's been very successful in its obviously launch period with the PR campaign and the limited marketing that we've done so far and with our existing client base. We want that to be a leading proposition within the European market. So we'll be using funds for that. We want to grow the number of people we have on the ground significantly from where we are. We just actually moved offices in Munich to host more people. It hasn't been used much since we did open the office, but that office we want it to be as full as we can possibly get, with social distancing taken into account sooner rather than later. And then we only really talk about the launched B2B partners that we have, obviously Barclays being the latest one, which went live on the 10th of July. We have a pipeline of other partners that we're working with that are in implementation phases and will be going live either later this year or in some point next year, and to support those partnerships and hopefully further partnerships that come down the line. We need more people, either in product roles, engineering roles, operational roles, strategy roles, to help us get there. And then obviously supporting the business in other areas as well. Marketing team is obviously growing with everything that I was mentioning on the brokerage side, and we've got the wealth and savings business as well. That is like our core business. There's not a shortage of places for this capital to go. We won't be spending it all at once, obviously, but it's we're really happy to have closed it. It's quite there's been challenging times for everyone with 2020 not being the year that everybody wished for January 1st, but I think that the signal that we were able to raise capital is a good thing. I think it's good for the sector. Although COVID has been challenging in many, many ways, for Fintech, there have been huge growth areas. I think the theme for traditional financial institutions to digitize has just been accelerated overnight. Firms that thought they were digitizing learned quite quickly that they hadn't. COVID has changed the game with regards to digital transformation. Everybody who thought they were doing something realized they weren't doing anything. It was all just trying to put a plaster over a lot of creaking infrastructure, and we can help with that stuff. And the projects that we work on, they can be multiple year implementations. There's a lot of complexity of integrating in the right way multiple services. We've got a tech stack, they've got a different tech stack. We need to kind of mash them together and make them talk to each other, and we end up being the flexible ones because we've got quite flexible microservices architecture. We can basically translate our data into however they need to see it, and one of the reasons I think why people partner with us is because we can do things a bit quicker and cheaper ultimately than them doing it themselves. Now there's a very clear need for them to do this because they don't have an alternative. It's there is no way to do face-to-face financial advice anymore. People aren't going to come to the branches in the same way that they used to. So if you want to compete in this new market, then you need to get a proposition stood up. I think we appear to be a viable solution for a lot of these partners.
Absolutely, and we did a interview with Indo Services, a new bank in Iceland, a couple of days ago. And he was an ex-bank and got very, very passionate, saying, I do not understand why a bank would try and build something in-house when there's people that specialize in it. It's in many ways, it's almost an arrogance of, oh no, we can build that up in 6 months, whereas partnering with the likes of yourselves and the 25,000 plus fintechs around the world, it just seems the most sensible way of moving forward.
Yeah, I've got a firm of 130 people that are dedicated towards digital investing, and so we've lived and breathed it for the last 6 years. We've made all the mistakes, and we've learned from them. So we can accelerate our partners' learning curve by saying, look, here is the playbook. Here is actually how we would do it, and we'll do it for you. And because we know how to do it, it'll be a lot quicker, and it'll be a lot cheaper than you trying to muddle through this yourselves. I think I 100% agree with the point of view there. I think that partnering up comes with a lot of value. Obviously, it's challenging. It's not easy to not just from a technology point of view, kind of bring together a fintech and a large institution, but also from a business point of view. You've got the kind of David versus Goliath, small versus huge kind of partners there, and you find the issues around culture and procurement and the day-to-day operations of the two organizations. They need to be managed effectively, we've done it now 8 times. It's not always plain sailing with all of our partners. But I think that we've been able to kind of get through some of the challenges of integrating, of implementing, and getting stuff live. And then there's the other side of it, which is we just don't know how to build it, but we also know how to operate it. So because we have our own direct-to-consumer proposition, we know what clients want, we know what they don't want, we know how they behave. We can kind of bring that insight into the whole partnership as well. And so it's not just about we're going to give you technology and good luck with it, like a traditional software vendor would, but it's being a true partner of the firm and saying look, now you've got that, you need to improve here, we'll build those improvements for you. This is what we're seeing with our client base, we're going to build this new functionality, do you want it as well? It's kind of taking that platform approach to partnership, which is kind of heavily needed in the traditional space, where traditionally a financial firm would build something, it would take years, and then it would lose its budget and it would sit there and it would be assumed to succeed, and if it didn't succeed it would be pulled. In reality, that's how nothing works. You build something, you learn, you change it, you make refinements, you learn some more, and you take that agile approach to development, and before you know it, you've made all of those refinements and you've got an amazing platform that you end up with a large client base that loves it. It's taking that philosophy into the large institutions as well, which they want to do, but it's hard. And so I think one way they can do it is by outsourcing it a little bit and bringing fintechs in-house to kind of be their innovation arms, if you will, where they might struggle a little bit with agile and with speed of development and the ability to make small refinements in a frequent manner. That's how all of the fintech industry is built, I think that's something that they can benefit from.
Brilliant, excellent. Well, thank you so much for taking the time to speak with us today. Where can we find out more about you, and how can we become a scalable capital customer?
Yeah, I call it scalable as well, don't worry. But Googling Scalable Capital is usually the safest way. Our web domain is scalable.capital, which can throw some people off.
That's a cool domain. See, I get slapped all the time for not having a .com, but I like having it like a .finance, a .capital. That's a cool domain.
It probably means that you lose a lot of emails from people that you don't really care from hearing about. So it's not necessarily a bad thing. I'm hoping the same thing happens to me. But no, just Google Scalable Capital, see what we're about. Pretty much everything is on there, and even if they're based in Europe, they should hit our German website, which gives them a little bit more information about becoming a client out of the German entity, which is passported all across Europe, or the UK entity if they're UK based. So.
Brilliant, excellent. Thank you very much, Adam.
Cool. No, thanks a lot for having me, Ali. It's been great to catch up.